Sectors Up Close. I'm Elena. Today we're talking carbon markets with Elena Belletti, Head of Carbon Research at Wood Mackenzie. As delegates at the COP27 summit in Sharm el-Sheikh get down to the tricky business of hammering out conclusions, cash is the main sticking point. Extracting the money developing countries need to fund the energy transition from Western governments is proving tough. So there's a renewed focus on carbon markets, allowing private investors and companies to offset their own emissions by funding cuts elsewhere. US climate envoy John Kerry last week launched the Energy Transition Accelerator, a carbon market scheme aiming to mobilise $130 billion by 2030. It enters an already crowded market in carbon offsets. This is the benchmark European Union carbon price contract, one of the world's longest established trading schemes. Unlike Kerry's voluntary suggestion, this is a compulsory cap and trade scheme that forces companies to offset emissions above a certain cap, and the allowances are a tradable instrument. That price fluctuated between $80 and $90, as you can see there, for most of the last year, but it has been falling in recent months as higher energy prices lead to reduced output from industries that are big buyers of carbon permits. So, what does the future hold for carbon trading? Let's ask Elena Belletti of Wood Mackenzie. Elena, hi, thank you for joining us. To start with then, why turn to market-based solutions here? What does it enable us to achieve in terms of decarbonisation?
Yeah, that's a great question. So market-based solutions are basically an instrument to turn carbon into a commodity, and they basically allow companies that are better to decarbonize quicker than others, and they make greater climate ambitions possible at a lower cost for society. We forecast that by 2050, the total volume could be $200 billion, so a 100-fold increase with respect to today.
But how can investors ensure the quality of the offsets that they're buying?
Yeah, there are some criteria that usually investors should follow. So making sure that 1 ton of carbon is actually removed or sequestered for each credit that they buy, making sure that the offsets are additional and they deliver co-benefits. But of course, the devil is in the details. To give you an example, a forestry that sequesters carbon is actually more trustworthy and delivers better quality offsets than a renewable project that avoids those emissions.
What about the price that these offsets should be set at? Some of these schemes are trading at just $5 per tonne of carbon. The EU's compulsory scheme is more like $75. When Reuters interviewed IMF chief Kristalina Georgieva at the summit last week, she said the price must be about $75 to make any difference. What do you think? At what level does the price start to become meaningful?
Well, not at today's prices. Today's prices, even in the compliance market, they're just about $22 to $24 average. At Woodmac, we do predict that by 2030, prices will be below the $75 that the head of the IMF talked about. They will be around $40 in our base case, and even in our 2-degree warming scenario, there will be around $75, $76. So the level definitely needs to increase, but it's not just about the level of prices. It's about predictability, because companies do need to make investments towards low carbon technologies based on a stable, on a credible expectation for having a carbon price.
But the EU price has actually gone down per tonne of carbon in recent months, partly because polluting industries have fewer fossil fuel emissions to offset because they're trying to cut their energy use. So isn't that a flaw in all of these schemes, that as we manage to cut our fossil fuel use, carbon trading will become less useful?
Well, as a matter of fact, the ultimate objective of every carbon market is to disappear, because there will be no more emissions, and so nobody will need to actually pay for those emissions. It is true, though, you're absolutely right, that in a normal situation, this would happen in parallel with a progressive increase of the carbon price. And this is a very special situation that we're facing at the moment, because in the end, the market is still based on this assumption that the economy is healthy and that there is a recession ongoing.
Thanks so much for that insight, Elena Belletti, Head of Carbon Research at Wood Mackenzie. And that's your roundup of the carbon trading sector. I'm Elena Casas, and this is Reuters.